On today's hot sheet, I am discussing list price versus sale price, new home sales, home insurance shock, and the weekly unemployment rate. We've got a lot going on today. Today is Thursday, June 27th, 2024. I'm Jeremy Knight, and the hot sheet starts now. Welcome to the hot sheet. Do me a favor, drop in the comments where you are coming in from and what you are seeing in your market. Justin, good to see you. We've got a lot to get through today. Welcome to the hot sheet, the industry's only daily news show on the internet, brought to you exclusively by BAM. The hot sheet covers what you need to know in the real estate market industry over the last 24-hour time period. For access to the charts and slides we'll be reviewing today and every day, sign up for BAMX. This is where you get all access past to the hot sheet daily downloads, courses, biweekly masterminds, and the BAMX community. Use the hot code Jeremy to get 10% off your subscription. And the link is in the description below. Look, if you don't use cheat code Jeremy, you are missing out. It has been said, it is in the ruins, on the walls, in caves, saying that this is the best code to get the best deal. So use Jeremy as your hot sheet code or your BAMX code to get all the goodies. So today we're going to be talking about a Redfin report, talking about the first time that we're actually seeing reduction in list to sale price ratio. Who do we got in the comment section so far? We have Don coming in from East Texas. Good to see you, Don. Alicia coming in from Sacramento. Good to see you. Trisha, good morning from Montana. Bob, good to see you from North Coast, Ohio. Nice. We got Jennifer from Westminster, Colorado. Good to see you, Jennifer. And Brad, good to see y'all. So we got a lot to get to. This Redfin report just landed, and so there's a lot to get through in it. So let me jump in here. So is the industry market cooling down? Homes are selling below asking price for the first time since 2020. Here's what this means for buyers and for sellers. For the first time since the pandemic started in 2020, the typical U.S. home is selling for less than its asking price. During the 4 weeks ending in June 2023, June 23rd, homes sold for 0.03% less than their list price. This is a notable shift from last year when homes sold for exactly their list price, and 2 years ago when they sold for roughly 2% above list price. I'm curious, in the market you are in, what are you seeing? Are you seeing this trend? Tell me what's going on, and we're going to pull up, because I love the comment section here. I can tell you in the Austin market, we just dropped 2 properties. One we listed at 1.1 million. It was a little high when we listed it. We just dropped today to 969. So that's a pretty significant drop on that one. Another one we listed at 599 that we just reduced to 545. So in the Austin area, we are reducing, and that's because there is less buyer demand than there are listings. Currently, only 32.3% of homes are selling over asking price, the lowest share for late spring since 2020. Additionally, nearly 7% of home sales have dropped from their asking price, the highest level since November 2022. Jennifer says it varies by neighborhood. VB, what's up? Good to see you. So why is this happening? There are more supply than demand for current types of homes in various parts of the country. New listings are up 8.2% year over year, while pending home sales are down 4.3%. Most of the inventory is growing stale, which we talked about last week on the hot sheet, with over 60% of the homes listed for at least a month without going under contract. This is curious. I'm curious how you're telling this to your sellers and to your buyers, right? Are you right now in your market saying, hey, Mr. and Mrs. Buyer, look at this. We can actually get a lower price. Let's beat these high interest rates by doing these 5 things, right? Are you going to new construction, which we're going to talk new construction in a minute? Do you have new construction in your area? So I want to hear from you in the comment section on that. So so buyers are hesitant due to high housing costs. The median home sale price has hit an all-time high of $397,000. And while mortgage rates have dipped slightly, they are still near their 7% mark. The typical home buyer's monthly payment is roughly $2,800, just about $50 below the record high. So again, like here in the Austin market, you can rent for a lot cheaper than you can buy. And it's curious to me that everybody's saying, oh, you can go rent, go rent, go rent. It lends to that whole thing out there saying that they want people to be a renter nation because everybody's pushing to go rent versus buy, but it is cheaper. Record-breaking heat is also a factor, which some buyers in hot areas such as Phoenix putting off home tours. However, experts believe that lower mortgage rates could bring buyers back into the market. Byron's been on the channel here talking about, so when are you waiting for lower interest rates? When are you waiting for lower mortgage rates? I mean, we're going to go through some of the unemployment rates here in a minute, and the unemployment rate hasn't really dropped or gone up enough to really make a dent in the CPI. So we'll get into that in a second. There's a chance that sales prices might lose momentum soon, with more homes selling below asking price and for high share of sellers dropping their prices. Buyers might see a slight relief, plus mortgage rates could decrease. Inflation continues to cool. Okay. Redfin agents advise both. I love how they put in here. Redfin agents advise both buyers and sellers to be realistic on prices. Are you advising your buyers and sellers to be realistic on prices? I know I just came from a listing appointment this week where the seller has watched my YouTube channel, and it's good content like this that I take and put on my YouTube channel. Are you leveraging YouTube? I know BAM has several courses on YouTube, and if you are looking to do more YouTube, I can help you with that as well. But these are videos that I've been making on YouTube because it's long form content that you can take a basic script like that and tell clients what's going on. But these sellers were extremely realistic. They want to sell their home. And I said, look, we would normally sell your home at this price. We need to deduct about 7 to 9% from that. And this is where we really need to be. I hate to tell you that, but this is where we are in the market if you do want to sell. So what are you telling your sellers in the market? I'm curious to see what you're saying. Phoebe's saying, I'm seeing multiple offers on some homes, and some homes are just sitting with multiple price reductions. I'm getting some buyers deals while others are having to go over asking. I know we've been leveraging new construction here in the Austin area, and we had one client get $115,000 in incentives. It's interesting. One of our sellers, and you tell me if you're having this in your market, one of our sellers, I had to get them to drop well below $1 million because there's a comp on the market right now that the seller, the builder is offering 6% buyer commission plus concessions. It's interesting to me. I see all these articles in the Austin Business Journal right now talking about how realtors are having to negotiate or navigate these new uncertain terms with the commission thing, the way it's shaking out. I'm curious to why more of these big media companies aren't talking about the impact it's going to have on sellers and buyers. Because in that scenario, I had to explain to my seller, like, how are you going to compete with this? The only way you're going to be able to do it is with price, because they're offering 6% agent commission, right? They're offering this, they're offering all these things that you can't as a seller provide. So, hot properties are either move-in ready or complete fixer uppers. So those are the properties that are selling the most compared in this article, right? And so that's what I'm seeing too. Are you talking to your sellers about having to really make sure a home looks good? Homes that are pretty nice but not updated are sitting on the market the longest, and I'm definitely seeing that as well. Do we have any charts to add on that? I think we had a couple of charts to show on here. If you want to pull up those charts real quick. Don says multiple on some of the down the road or next neighborhood, you can get 150 plus on the market, and many sellers are chasing the market and they need to get ahead of it. I'm telling sellers, Phoebe says, I'm telling sellers to price to sell for today's market, not pandemic highs. Yeah, and I think that's what's tough, is that if you look at pandemic highs and people aren't, your clients aren't reading these Redfin reports, and we're not articulating these Redfin reports, or, not even Redfin. I mean, look at all the reports that have come out, that Byron's been talking about the hot sheet. And this is exactly why you need to use the hot sheet code Jeremy, because if you're not following the hot sheet and getting the replays and watching and getting the downloads, I'm not going to lie. I shot 3 hours worth of content on Tuesday. I took the hot sheet notes and I made 3 short form videos like that, just using the hot sheet notes that Byron put out on new construction. I have a full video coming about new construction, which we're going to talk about in a second. And it's because I was able to take a lot of what's happening on here. So if you're not a BAMX member, I highly recommend this is the time you get there. And if you are a BAMX member, you are ahead of the game. I appreciate you. Um, so Phoebe says, I'm telling, okay. And then Justin says, I just closed one for over list while having 2 others have price reduction. So that's what we're seeing in the market. Let's get into, let's see, did we have new construction or were we still talking new construction? No, we are going straight into home sales. So new construction home sales. In May 2024, new single family home sales dropped to an annual rate of $619,000 or 619,000, sorry, not dollars, making it 16.5% decrease from the previous year with a median sales price of $417,000 and an inventory supply of 9.3 months of inventory. That is a lot of inventory. And that's why some of our clients are deciding to go new construction versus buying resale. And this is why we need to be discussing this with our clients, because we're getting 4.9% interest rate, right? That's way better price for the interest rate. And we're getting thousands of dollars off the price. So new home sales, seasonally adjusted annual rate of 619,000 for new home sales for May. Comparison to previous month, which was 11.3% decrease from the revised April rate of $698,000. You know, I think we talked, Byron talked the other day about that we were seeing less starts. So you're starting to see builders get a little worried here, right? What was it? The builder index came down to 43. So builders are getting a little nervous in this market. Year over year comparison is 16.5% decrease from May 2023. So this is something I'd be telling my clients too. Like, look, builders are starting to worry. Is this the time to actually sell for you? Are you going to wait? What's our plan here? Median sales price is down to $417,000. I'm curious, for new construction, median sales price of $417,000 and a median or an average sales price of $520,000. What does that look like for your market? Is that above or below your market? Curious on that. Inventory seasonally adjusted estimate is 481,000 new homes for sale at the end of May. So we're seeing more inventory, less home sale, but we're also seeing builders pull back on what they're building. I read a report by Zonda the other day. This is a really good one. It's not on the hot sheet here, but I read a really good report by Zonda and actually created a video off of this. So if you just Google Zonda new home sales, but they were saying it was an increase in the amount of incentives builders were giving to buyers. And that was 61% of sales, which is up drastically, are giving more incentives. So curious what you're seeing there in your market. You tell me with the new construction. Do we have Census Bureau charts we want to pull up on that? That'd be great. But yeah, what are you seeing for new construction in your markets? We're seeing a lot of sales in the Austin area. Actually, we're seeing a decrease as well. But I pulled this stat in the Austin area is that new construction only makes up 28% of the homes on the market, but it's 50% of the homes under contract. I'll pull that chart back up one more time. I do want to talk about that chart. So this is stuff that you should be pulling up in your MLS notes and showing buyers and sellers like, hey, do we want to go new construction? Do we want to go here? What's interesting about this chart, so this is showing where we are as sales. So sales are still well below, is this for sales? Yeah, homes sold. Still well below that big peak in 2020, but sales are still below that massive 2008 crash peak as well. So you're seeing a lot less sales there, but sales are much higher than really if you go back to 2018. They're on average for 2018. So what we're seeing right now with new construction sales is more of a 2018 market. So that's a more average market. And this is what I would be telling our clients here is like, look, we're still on track with a normal market. So I know that you see these crazy headlines by Redfin. You see these crazy headlines and it's scaring people. But we're back to an average market. 9.3 months of inventory in new construction is still quite a bit. Okay, I think we're going. We beat the new construction to a pulp there. In the live chat, make sure you are still continuing to follow along. I want to hear from you, and I love your comments because it makes doing this more fun. Okay, Resi Club ground floor survey reveals that 80% of landlords are concerned about future home insurance increases driven by climate risk and construction inflation, with premiums rising significantly across both coastal and inland states. Okay, I'm curious if you're seeing this. I know, again, I'm a big YouTube guy. I love YouTube. It's my number one lead generator for me and my team. Paul Likens did a video a while ago about the HOA issues in Florida. And then he made a really good video talking about the insurance increases in Florida. And those videos are some of his highest viewed videos. So this is a topic that you may want to talk to your people with, right? Because if investors are worried about insurance shock, you may be worried about insurance shock. I know here in Texas, my wife was saying our insurance went up again. Why? And we have several investment properties, and I'm more worried about in the Austin area, the taxes going up than insurance. So you tell me in your markets what you're more concerned about. But investor concerns, 80% of landlords in the Resi Club ground floor housing investor survey are concerned about future home insurance increases, with 37% very concerned. We have a really good chart for this if you want to pull that up. Insurance premium increases. The average U.S. home insurance premium rates rose 11.3% in 2023. So here's a really, really good chart. So this is what I was saying. Like, I'm not as concerned. I'm in the Southwest. If you look at the Southwest, very concerned, is a little bit lower. Southeast is a little bit lower, but the Midwest is higher, right? And if you're looking at a very unconcerned is lower, I guess. I was looking at that wrong, but very concerned. Southwest is up. So I'm not as worried about it, but people in the Southwest are, especially if you're in getting hail damage and things like that. If you're looking in Florida, I guess they consider Florida South. So Southeast is up 41%, somewhat concerned, 45%. Northeast, right now it's super hot in the Northeast. I know I'm headed to North Carolina, South Carolina soon. And everybody's telling me how hot it is over there, which Texas is in the 90s, which is great. So the increase was double digits by 6.6% rise in 2022 and significantly higher than the pre-pandemic increases of 2018. I know I partnered with a really good local Allstate insurance here. His name is Paul Guerrero. I call him Paul State. Haha, Paul Guerrero, shout out to you. And I have him give me information all the time to pass on to clients. So you may want to partner up with a really good insurance agent as well if you're not already. So coastal states, particularly around the Gulf, saw faster increases. Texas homeowners experienced one of the largest increases by 20.3%. Maybe I don't pay attention to ours because I'm not as concerned about it, but I'll have to ask my wife. New coastal states like Indiana and Iowa, also non-coastal states like Indiana and Iowa also saw a significant increases, 12.2% and 13.5% respectively. Contributing factors, climate risk, housing and construction inflation leading to higher replacement and repair costs. That's a big thing. I know, a lot of these builders, and even in the Austin area, are still struggling to give an affordable priced new construction home because labor costs are so high. Even some of the costs for building are still really high. Efforts by insurance to keep up, although state, I read that right, I guess. Efforts by insurancers to keep up, although state insurance commissions are slowing the process in some areas. 224 investors owning short-term and long-term single-family condos or townhouse rental properties completed the survey. Okay. So Don says, not just an increase in the wind roof deductions increased from 1% to 2.2 to 2 to 3%, and even 5% in North Texas. Getting a roof is now becoming a deal breaker. That's tough. Taxes and insurance have gone up so much in Colorado. Yeah, I agree. Jennifer says, I haven't seen the insurance impact on my buyers yet. It's coming. I'm sure my own insurance guy told me that when our homeowners insurance is up for renewal. We had we recently sold last year one of our rental properties that was on the beach. It's a great rental property, but the insurance kept going up. I wasn't getting more I wasn't getting more rentals or bookings on it. And I felt like I was just going to continue having problems. We sold that thing last year, and literally everyone over there's a hurricane that hit right after we sold our property. So buying on the coast might not be that great, but living in Central Texas or living central where you're having hailstorms and having to replace roofs is not as good either. Let's move on to unemployment. What are we all seeing in unemployment? In the week ending June 23rd, 2024, seasonally adjusted initial unemployment claims decreased to 233,000, while the insured unemployment rate remains steady at 1.2%. This is the highest insured unemployment level since going back to November 2021. So initial claims are about 6,000 from the decrease. So initial claims are at 233,000, which is a decrease of 6,000 from the previous week. Previous week's level revised up to 238,000 to 239,000. So the 4-week moving average is 236,000, increased from 3,000 the previous week. So I can tell you here in the Austin area, I just did a video on this, a short video on the unemployment rate. And what's interesting, unemployment went up a little bit, but it's still below last year's unemployment rate here in the Austin area. So I'm curious if you're looking at the unemployment rate and making any content for your local markets to talk about that, because unemployment rate could impact your markets. It's also impacting what's happening with the CPI. It's impacting, I mean, obviously we need, the Fed wants unemployment to go up so we can drop interest rates. So if we keep seeing this leveling and not really movement, right? 6,000 isn't a lot. So if we really don't see a movement, are we going to see interest rates come down? Are we going to see a reprieve for our buyers? Insured unemployment rate is at 1.8 million and increased by 18,000 from the previous week's revised level. Highest level since November 27th, 2021, which was at 1.8 million, around the same amount. Previous week's peaks level revised down from to 1.8. So on that 1.8 range, a lot of information here. I'm curious, when you hear all this information, do your eyes glaze over? Because when I hear all the data like this, sometimes I glaze over as well. So just curious, say if you do or you don't. Jody says she's late to the party. Well, you're here. I love it. I'm glad you're here, Jody. And Yasmin says hi from Wilmington, Delaware. Okay. Let's pull up the 10-year treasury, see where we are there. I saw rates yesterday ended at 7.06. So a tick down today. So that should be good. Hopefully we continue to see a tick down. This unemployment news didn't really do enough to really drive that down further. That would have been really, really nice. So thank you, everybody, for joining us on the hot sheet. Remember, use the hot sheet code Jeremy if you are going to get your BAMX membership. Look, I'm a big fan of BAMX. I'm not on the payroll, but I love helping BAMX. And anytime Byron, Vanessa, and the team shoot me a line to jump on here, I'm glad to do it because I really love supporting what they're doing here. I feel like as agents, we are in a time that we need as much good information as we can to arm our buyers and sellers. I feel BAM is doing an amazing job with that. So thank you, and we will see you on the next one. Great seeing you, Jody.